Hello, you're watching Proactive. I'm joined by Han ETF co-CEO Hector McNeil. Hector, very good to speak with you. And 2025 off to a flying start. It's been a choppy start for Bitcoin, but it's back above $100,000. And I suppose nothing goes up in a straight line.
Yeah, no, I think there's inherent volatility, obviously, in that as an asset class, because it's still going from being, the Bitcoin fanatics to the more mainstream investors, and obviously we've got a massive day on Monday with Trump coming to power, and I think the crypto community is expecting great things from that. So, I still maintain I think 150,000 is doable in the first half of this year, and I think it'll be largely down to that bringing those sort of more established investors into the investment space. And obviously, the easiest way to do that is through an ETF, right? So it's exciting times, really.
And of course, I mean, you can expect more volatility going forward, but you see the trend, long-term trend as going up.
Yeah, certainly short to medium term, certainly, and I think there's a lot of froth around what they're expecting from the Republicans on this, and I think they'll be, I don't think the crypto community get everything they want, but I think they'll get a lot of it, and I think you'll see more crypto ETFs coming out in the US, sort of catching up with what we've done already in Europe. But certainly, I think there'll be a lot of demand pressure, which should keep the price healthy and going north, really. So yeah, no, I think it'll also spill over into Ethereum and Ripple and Solana and those other coins as well. So yeah, very exciting times in this space for sure.
I mean, looking at another asset that's done pretty well so far this year, and that's gold. So it hit all those record highs last year. We had it hitting a record high in sterling terms this week, and also pretty close to its all-time high in dollar terms. So, Hector, how do you see that playing out? Because we do have economic uncertainty, we have ongoing political uncertainty, and we also have global turmoil at the moment.
Yeah, and I think we've also got, the likelihood of a bit more inflation as well, right? So, which all should be good for gold. And it's probably the best and the oldest and most reliable insurance assets that you can have. I always call it like your airbag in your car or your parachute gold. It's one of those asset classes that you actually feel pretty happy if it's not doing particularly well because it probably means everything else is doing badly. And as you say, from a stress perspective, but I do think it's a great diversifier for a portfolio. It's got lots of reasons that people buy it. Whether it's the utility value of it, the store of value it, or even just it looks nice around your neck. It's a great asset class, and there's not very much of it, Stephen. As you know, it's the size of all the gold in the world has ever been is only the size of an Olympic-sized swimming pool. So it's a pretty scarce asset as well. So yeah, no, I think gold's going to be strong where it's at. And as you mentioned before, if geopolitics overtakes us, it could have a bit more of a run, but I don't think it's going south anytime soon for sure.
And of course, easily accessible through like an exchange traded commodity fund such as your own, Hector.
Yeah, no, obviously, I mean, actually, one of the big things on demand, RMAU went through $1 billion for the first time last year. The raw mint physical gold, and we actually brought out a really nice version as a currency hedged version as well, RMPH, which means that you can buy the gold ETC and automatically the dollar price will be hedged into sterling for you. So if you're a sterling investor, you can take advantage of that. We also did euro versions and Swiss francs as well. So we've expanded that range from one to four products. So yeah, no, we think that's exciting from that perspective. And as you say, the market access of having a gold ETC is incredibly easy and democratic for all investors. No need to stick it under your bed or behind the cupboard or dig a hole in the garden anymore, Stephen. You can keep it in a gold ETC like RMAU.
I mean, you mentioned ongoing political tensions globally, and we also still have those ongoing wars in the Middle East and also between Russia and Ukraine. So it looks like talks are progressing between Israel and Hamas, but still demand for ETFs like NATO.
Yeah, certainly the Future Defence ETF NATO. I mean, funny enough, it went through $700 million overnight. It's had its best AUM levels since it's been released, and it's only been in the market for 18 months. But funny enough, actually, I've just been invited to a trip to Ukraine to discuss reconstruction. Because obviously they know about our NATO fund, so it's going to be quite interesting. But I mean, even the short-term issues around, whether it's the Middle East or Ukraine or even places like Sudan and Yemen, etc., or either South China Seas. I mean, what's very, very clear is certainly European countries are spending a percentage of GDP as if the peace dividend is still in place. And obviously, we're more akin, to the 1930s or Europe or the Cold War, where I mean, Britain was spending in excess of 7% of GDP at that time. So I think that's unsustainable. I mean, certainly think everybody has to. I mean, a very likely outcome, I think, on Ukraine's going to be some contested territory, which there'll be some peacekeeping forces in there. And we all know the numbers in the British Army, for example, have been under pressure for a long time. So these things will stretch capabilities. So I think there's no doubt that we're going to see this. I actually was in Warsaw yesterday, Stephen. The last time I was there was 1996. Just after the communism dropped there. So it was quite interesting to see their attitude towards what's going to happen. And they've ordered 1,000 tanks and armored cars. Given to the context, Britain can put 300 tanks on the battlefield today. You can see that they're obviously expanding. So I think from any measure, people are going to have to put a lot more expenditure into arms and cyber warfare for sure, and that should really go well for hedging that through the NATO ETF for sure.
And I suppose another trend to keep our eye on this year is technology, particularly with AI moving ahead in the great leaps and bounds. And covering that, you have your iTech Tech Megatrends ETF.
Yeah, we're really excited about iTech actually, because I mean, obviously the last sort of 5 years has all been about the Mag 7, and how those have dominated, and I think everybody's feeling that it's going to be the small to mid caps story, and the best performing index, once the Trump won the election was the Russell 2000, which is a really good proxy for the US smaller company scenario. So yeah, we feel that's going to be a continuing trend, and certainly we should see a lot more M&A activity and better earnings and dividends, etc. in this sector. And iTech, given it's got eight mega trends, including the core ones people think about like AI, robotics, EVs, cloud technology, social media, etc. You can get that all in one ETF. Eight megatrends, and they're all equal weighted, and then the stocks are equal weighted inside that, which means actually that the largest stock that's held in that ETF is actually less than 2% off the holdings. Whereas if you were looking at the Mag 7, you're getting on for over half the Nasdaq 100 being part of that. So you're very, very exposed to those to that concentration risk. So something like iTech is a really nice diversifier to stick in the portfolio to take advantage of that sort of mid cap, small cap story. So certainly we're expecting the Trump trade to have a big, big impact in that sector this year, and we think investors should sort of pivot, out the large caps into the sort of small mid caps on that basis for sure.
Lots to keep our eyes on for 2025. Hector, thank you very much as always for your insights.
Thanks, Stephen. Always a pleasure. Happy New Year.
And to you, Hector McNeil, the co-CEO of Han ETF.